Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 14th of October. Let's dive into the week's stock market news. European stocks rise on hopes of ECB rate cuts and Chinese stimulus, driven by optimism surrounding potential interest rate cuts by the European Central Bank, ECB, and increased economic stimulus from China. European stock markets generally showed positive performance. The Pan-European Stocks Europe 600 index ended the week with a 0.66% gain in local currency terms. Italy's FTSE MIB led the way with a significant 2.13% climb, followed by Germany's DAX at 1.32% and France's CAC 40 index with a 0.48% increase. Bucking the trend, the UK's FTSE 100 index experienced a slight dip of 0.33%. Despite this positive market sentiment, Germany's economic outlook remains a concern. The Federal Ministry for Economic Affairs and Climate Action revised its economic forecast, now predicting a 0.2% contraction this year, a notable shift from the previously anticipated 0.3% expansion. The ministry emphasized the need for stronger consumer spending to reignite economic growth in early 2025. This comes on the heels of a sharper-than-expected 5.8% sequential drop in factory orders in August, although industrial production offered a glimmer of hope with a 2.9% increase, fueled by a rebound in the automotive sector. Minutes from the ECB's September meeting reaffirmed the central bank's expectation that inflation will slow towards its 2% target by year-end. While the ECB suggested a gradual reduction in borrowing costs if inflation data aligns with its projections, it stopped short of committing to a specific rate path. However, recent comments from several ECB officials seem to echo market expectations for a faster pace of policy easing in response to slowing inflation and economic weakness. These officials expressed openness to further rate cuts in October and December, highlighting that even with these reductions, interest rates would remain in restrictive territory. Meanwhile, the UK economy showed signs of recovery, expanding by 0.2% in August after 2 months of stagnation. Growth in manufacturing and construction offset a slight uptick in services, contributing to the positive economic performance. Now our insight into alternative markets, the human touch. Why expert-driven AI is revolutionizing private equity due diligence. Artificial intelligence, AI, and specifically generative AI, GenAI, is rapidly changing how private equity firms conduct due diligence. While GenAI excels at analyzing data and recognizing patterns, it's the combination of human expertise and AI that unlocks its true potential. This expert-driven approach to AI marks a significant shift, moving beyond simple automation to a collaborative partnership between human intelligence and machine learning. It recognizes that AI can process vast amounts of data quickly, but human experts provide the nuanced understanding and experience needed to interpret those findings and extract truly valuable insights. This human touch is essential from the very beginning. Experts carefully select and input the data used to train the AI model, ensuring its quality and relevance to the specific due diligence needs. They also craft precise prompts to guide the AI's analysis and generate meaningful outputs. Perhaps even more critical is the role experts play in analyzing the AI's output. GenAI can identify patterns and anomalies, but human experts provide the context. They connect the AI's findings with their understanding of market dynamics, industry trends, and the specific circumstances of the company being evaluated. By combining their knowledge with the AI-generated data, experts can uncover subtle nuances and potential risks that might be missed by AI alone. They also validate and verify the AI's findings, ensuring accuracy and relevance before incorporating them into investment decisions. This iterative process creates a powerful feedback loop. By continuously analyzing and validating the AI's output, experts refine the model, improving its accuracy and effectiveness over time. The AI becomes smarter, and the experts become more efficient, ultimately delivering more robust and reliable insights. For private equity firms, embracing expert-driven AI offers significant advantages. AI accelerates data analysis, freeing up experts to focus on higher-level strategic thinking. The combination of AI and human expertise uncovers hidden patterns and risks, leading to a more comprehensive understanding of potential investments. Expert validation ensures the reliability of AI-generated insights, minimizing the risk of costly mistakes. Ultimately, expert-driven AI provides PE firms with greater confidence in making informed, data-backed investment decisions. In conclusion, expert-driven AI is transforming due diligence in the PE industry. By strategically integrating human expertise at every stage, PE firms can leverage the full power of GenAI, unlocking deeper insights, reducing risk, and ultimately driving better investment outcomes.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.